Let us move on to the third category of ratios, that is activity ratios. So students, what are activity ratios? Activity ratios are the ratios which comment upon the efficiency of a firm in managing its assets. That is, how well a business is managing its fixed assets or its stock or its debtors. These ratios are often referred to as turnover ratios. Then students, they actually show the speed with which the assets are converted into sales. So then they show speed with which assets are converted into sales. So students, this category has various ratios under it. Let us move to the first ratio, that is inventory turnover ratio. Coming to inventory turnover ratio. By inventory we mean stock. So it can also be referred to as stock turnover ratio. Now students, stock or inventory is of three types. The first one being stock of raw materials. By raw materials we mean inputs that are used in the process of production. Then we have work in progress. That is, those goods which are incomplete or still in certain stage of production. They are not entirely in the form of raw material and they are not yet finished as well. So they are in between the process of production. They are referred to as work in progress. And the third one being stock of finished goods. Now students, stock of finished goods means those goods which we have completed but have not yet been sold, or these are the goods which are kept in stock to maintain a steady flow of supplies to the customers and to the dealers. Now students, any kind of stock that is mentioned here, which includes raw materials, work in progress or finished goods, remember it is always measured at cost or the market price, whichever is less, and that is because of the concept of prudence. We do not want to inflate our profits unless and until they actually accrue to us. So remember, any kind of stock that is valued at cost or market price, whichever is less. Now coming back to stock turnover ratio or inventory turnover ratio, what does this ratio actually tell us? This ratio comments upon the speed with which stock is converted into sales or the stock is sold. So it gives us an idea how fast the stock is moving in the business. The higher this ratio, the better it is considered for the business. Now let us come to the formula. The formula for stock turnover ratio is stock turnover ratio is equal to cost of goods sold upon average stock. Now students, remember, cost of goods sold represent the cost of production, that is the direct expenses including the material cost. In cases where it cannot be calculated, this numerator can be substituted by net sales. Then how do we calculate average stock? Average stock is equal to opening stock plus closing stock whole divided by 2. That is to find the average. By opening stock we mean stock in the beginning of the year, and by closing stock we mean the value of stock at the end of the year. So now we have the denominator. We can calculate the denominator, that is average stock, by calculating the total of opening stock and closing stock and dividing it by 2. Now coming to the numerator part. The numerator part is cost of goods sold. How do we calculate cost of goods sold? Cost of goods sold is equal to net sales minus gross profit. This is one formula. The other formula is that it is equal to opening stock plus net purchases plus direct expenses minus closing stock. So now students, this is the direct formula. The cost of goods sold is equal to opening stock plus net purchases. By net purchases we mean purchase minus purchase returns. Then to this total we add direct expenses. By direct expenses we mean those expenses which are incurred directly on the production process. Something like wages, carriage inwards, par, those items which are actually written in trading account, they are considered to be direct expenses. So add direct expenses, and from this total we will deduct closing stock. After this calculation we will get cost of goods sold. Once we have got both the components, you can divide them to get stock turnover ratio. Remember, this ratio is always expressed in times, and higher the ratio, the better it is considered for the business.